One question you all often ask about is whether you should invest in the stock market or in property. Let's break this down on an example. Before we do, however, please note that these figures are simplified examples only, and they do not account for all costs, tax, mortgage interest, maintenance, void periods, fees, or inflation. Let's get started. So, two people have £50,000 each. The first person, Julia, invested into the stock market. The second person, Lila, uses her £50,000 as a deposit to buy a £200,000 property. Let's say Julia invests in a diversified fund and gets an average annual return of 8% over 20 years. After 20 years then, her £50,000 could grow to around £233,000. Now, Lila uses their £50,000 as a 25% deposit on a property worth £200,000. If that property grows by an average of 4% per year, after 20 years, the investment could be worth around £438,000. And that's actually a gain which is £55,000 higher than the stock market investment. And that's due to the fact that she was actually leveraging her money here. This is where property can look very powerful. You're not just growing your £50,000 deposit, you're also benefiting from the growth of the whole property value. Of course, property also comes with costs: stamp duty, mortgage interest, repairs, insurance, tax, empty months, and time spent managing it, which can narrow this gap. And property values can fall as well as rise as well. If borrowing is used, then repayments must be maintained, and borrowing can also increase both gains and losses. Your property could also be repossessed if you do not keep up the repayments on your mortgage. In comparison, the stock market is usually more hands-off. It's easier to start with, easier to sell, and more diversified. Real estate can be powerful, but it's not always passive. The stock market can be powerful too, but it requires patience and consistency. So the real question is not which one is better, but which one fits your goals, your lifestyle, your risk tolerance, and how involved you want to be. Because building wealth isn't about copying someone else's strategy, but it's about choosing the one you can actually stick with.